It seems the markets believe that President Donald Trump will finally settle the score with China and come to an agreement. Do we think that will happen? It doesn't matter. What we think is that if you were following the insiders, you had the opportunity to understand that during May they bought more than $150 million worth of stocks altogether. And this man, Elon Musk, bought an astonishing, very close to $24 million worth of Tesla stock. How we know that? Because we follow Wall Street, smarters, traders, and investors, the insiders. Welcome to the weekly equity recap. My name is Jose Ricardo Tejaen, and today I want to take you over a few ideas from last month and last week and where we see markets moving, equity markets moving in the next 12 to 24 months. Please rest assured that all the information in these videos is for educational purposes only, does not constitute an invitation for you to buy or sell equities, nor call options. We do understand that you will use this information in your advantage. At all times, we urge you to make sure you measure your risk. There's no strategy out there in the last 4 decades that has been designed for you to avoid losses. They will and they may take place at any given time, and you must be prepared to do that. Also, please, keep in mind that past performance does not indicate future performance. Having said that, let's begin. So, the first thing we want to know always is who are the key players? Of course, for Tesla, a key player, it's Elon Musk because he is the CEO. He's the face of the company. He has been carrying this vision for XYZ amount of time. But what matters is to understand the positioning of the insiders. This is one of the things that we need to understand. And I have said this before many times when I train a lot of equity traders. The best investment will be a bad investment if you pay the wrong price. I repeat, the best investment will turn out to be a very bad, poor investment if you pay the wrong price for the asset, for your investment. That means that Tesla may not be the company we all think it has to be. It's a cult company, as our senior editor Ross Givens indicates. It's a cult company. It's a cult stock. People buy it because they are into this massive story that Elon Musk has been building up for years. Not to avoid mentioning also that we know that the government is somehow still sponsoring behind the Tesla engine. So we have to keep that in mind. Also, there's more competition in the market, so it's difficult for them to compete if they actually have not been ramping on production. But nevertheless, all these details may not matter, because when we have an insider of the category, a big hitter as Elon Musk, he knows he has something coming up. And sooner after the market decline back in May, about 6.71% for the S&P 500, suddenly that stops. People were looking afraid. The day-to-day retail trader was afraid of what will happen, but not us. Not us, because if you are opening your Prosperity Digest newsletter, you do in fact knew the amount of stock, the value, the face value of all the transactions insiders were conducting back in May. So that was a very good indicator, because on every single pullback since the 2008-2009 credit crunch, investors via the insiders, they have been piling up in the markets on every single pullback. So let's go to the charts, and the first thing I would like to share with you, there's a little bit of information. CNBC, they published yesterday this article, and what is on the media is the fact that Elon Musk closed his Twitter, and they're expecting a more focused CEO following up the production dilemma. Now, the most important, we're going to take a look exactly. This is the information that you must be aware. The price for the purchase was at $243. The total is about $25 million to be correct, to give you the exact amount. And he added 102,000, a few more shares. Now, this gives us a good opportunity. Now, keep in mind, he's not only the CEO, he's also a 10% owner. It matters. The only reason, remember, the only two reasons why insiders buy is because, one, the company is trading at a massive discount from the intrinsic value that these insiders know the company has. Okay, the company has a specific value, but for whatever reason, the market was correcting. Apparently, the mood was to think that the trade wars will continue with China. It's sort of like was the outlook, and then suddenly it reversed massively. And now we're threatening, or actually pushing to new highs. Now, what we need to understand is the opportunity that we had knowing this, and you get that opportunity by following us and the work we do at the Insider Report. And every week when you get your Prosperity Digest, you can know exactly the volume, and you will get a few ideas from us as far as what the insiders are exactly doing. Okay? Now, if you take a look at this, he bought at 243. Now, let's take a look at what happened exactly with Tesla, because it went as low as, if we take this bar, now I'm working at my chart package at TradingView, it's the low was 176.99, and right now the stock is up so far in June 22.6%. Now, if he bought, we just do the exercise, he bought at 243, he got filled at 243. So when this security was trading way below the 180 mark, you had an advantage over Elon Musk, about 26% estimated. So the other way to use information from the insiders is to position yourself, what I like to call front running the professional money, front running the insiders. And what that means is if they buy in, they're taking the risk for you. And they're eliminating the risk as well, because they're letting you know that right now it's worth for them to put money, because they're risking money. They have skin in the game. And when you have that, it gives you confidence. Because think about this. Would you rather buy from someone that is not has no particular risk in the company? Or would you like to be invested in a company where the CEO and 10% owner is risking everything he has to make it work? Think, what is better for you? Where would you like to be exposed? And like I said before, just quoting our senior editor, Ross Gibbons, it's true. This is a cold stock. There's a lot of things that are not working very well for them, but it doesn't mean that it cannot keep going up. That's not the point. The point here is to understand what is the value of the insiders. So, having said that, take a look at this. We had a 26% opportunity advantage because he's still bleeding money. So that means that this actually can have more room to break even for this position. Now, if we go back in time, and this is where I will share with you the opportunity so you can see exactly how Ross Gibbons publishes his information to the members. And I'm sharing this information because we were long and we took a hit in the position. But every time he buys, this is what happened on the last purchase in 2018. See how the market went up all the way, probably trading around 330. The market went all the way up to 376. That was a great opportunity, a great buy. Following Elon Musk, he's an insider. So we expected that to happen. It didn't. And this is the price rotation. It's one of the most important trading tools that you should be paying attention in 2019. The red line that you can see here is the POC, point of control. It's at $303, and that should be your target if you want to go long right now, Tesla. And of course, the low of June should be your risk so far. Now, the price tends to rotate. If you take a look, the 243 was the lower band of that price rotation, where the volume is focused between this level, between 303, 320, and then from 340 all the way to $360. Those are the levels to consider. And this is why, if you're a short seller, your days are numbered, because once prices are trading above the price rotation range, you have to be aware that this can easily pop up all the way back to retest the highs at 380. And if we have 1, 2, 3, 4, 5, the next time Tesla, ticker symbol TSLA, reaches new high all the way back to trade at $380, is going to make a short contract pullback It's a very small contraction, and then it will make you think that it's going to retrace and it will move higher. How high? There has been some ideas about Tesla being a $400 stock, but the reality is that we expect Tesla in the next 12 to 18 months to hit $522. I repeat, in the next 12 to 18 months, Tesla stock is going to hit $522. To explain this, let us go back to the charts and show you exactly what is going to happen. Now, we know that we still have a slightly advantage over the house, over Elon Musk in his purchase. If you actually bought at this level, which we have several clients, several members of the Insider Report doing that, and if you were keen and kind enough to open every time that we send you this newsletter, you will have this type of opportunities. But you still have a chance to go long Tesla. Insiders are not buying as much. This is why I'm not focused so much on the cluster, the buying patterns this month for insiders. We'll have an update next week. Be sure and make sure that you open the next issue of the Prosperity Digest newsletter. Okay? Don't miss that opportunity, because this one is just one of the many that you can get by just opening and learning more about insiders. So let's take a look. I always start working on the monthly chart. What we need to do is this. Take a look exactly what happened and what these 170, again, 176.99 represents. This is Tesla since sometime September 2012. If I take Fibonacci, and the only reason why I'm applying this is because I know where exactly Elon Musk bought his shares. If you take a look, the 61.8% is at $165. So the reality is this: the real risk was about 16%. If we take it only to 165, we're talking about 8%. But I like to use sometimes double that risk if I need that, so I can buy another tranche of shares. So I'll probably go with a 15%. That will put my exit strategy at $148. But the reality is that the 60.1% Fibonacci from the bull trend, all this bullish trend since 2012, is at 61.8%. That's $165. $165 was the real mark, was the mark to understand that if prices were breaking and opening below this level, then Tesla will go into a bearish mode. Right now, Tesla is still on a bullish, it's a bullish target, it's a bullish trend. So we have the opportunity to buy this stock right now and take advantage of what's coming for the stock. You already have the rotation, the point of control. Now we have to look how to play this risk. If I were you and I need to take a long-term position, this is my risk. 23%, and I will do tranches to exit. I will exit at the first level of resistance that has been historically sometime 2012 or 2014. I'm looking at a height of $291. That will be my exit position. I will be risking 23%, going out at 28% profit. You can play more conservative and you just do 16%. That's on you. You have to measure your risk, what you want to do exactly. But that's what I will do. Now let's take a look. Okay, here, right here. Now, the second level will be the high, the 380 level. We talk about this. It's the fifth time that when it happens, the stock will hit that high, and it will be the upper range of the price rotation scenario that starts all the way from 244, somewhere around this level, and it goes all the way up to 380. Okay, now that will give you a 21% risk and take home a 73% risk. Now, I talk about Tesla being a stock that will be worth in the next 12 to 16 months, probably that could be 12 to 24 months, it will be worth $522. To do that, again, I will use Fibonacci, and this is where I will let you think. This is the full price range. Let's take a look. This is what it did. Came all the way, and this is 2 times double top here, right there at 382. We know that. So it means that this is the beginning of the bullish bullish action, how it happened for the last 6 years. We just said it here at this area. I take the full range and I repeat the full range with Fibonacci. Where did it stop? It stopped at the 61. So I'm going to count the 61 as the rejection area. And this is where I see the target, 537. Now, of course, I'm not going to wait to sell at the high. That doesn't make any sense. That's a typical bad habit of retail traders. I will have some sort of trailing stops. That's the way we do it in the insider report. But around 522, I will be really ready to go out of this stock. That will be my exit strategy for profits. And this is how we know now where the Tesla stock is heading in the next 12 to 24 months. Because the massive rejection of the 61.8% Fibonacci is a fair indication that Tesla is still in fact in a bullish trend, and we have to take that opportunity. And once again, we know that Elon Musk, CEO and 10% owner, bought 24,999 dollars. It's $25 million worth of stock on May 2. He bought this position, and he got filled at $243. So that's exactly what we have to look here. This is how powerful is the information we share in the insider report. These are facts. These are not mumbo jumbo, woohoo, some sort of voodoo. These are the real numbers measured by risk in how you can approach a position. Again, you need to measure your risk. This is how I see it playing. If we are at this level right now, let's see, we can have it, okay, here. You can use easily the low of June, 176, as the level to measure your risk, and that will be at 23%. You can round it up to 25. Okay, so this is the information we have for the insider report as far as positioning ourselves. We took a hit, we went out, we were stop loss, we added the position too soon, and as I repeat, although the research is solid, it's a very comprehensive research, if you pay too much for your investment, it will turn out to be a poor investment. Always pay attention. You need to pay the right amount for that, for the asset. Now, before we go, I want to take a look at where the S&P is trading right now. I'm going to take a look at S&P 500 futures contract rotation. Once again, this is out of the scope of the insider report, but this is where the stops are located. Right now, we're applying Hawkeye Traders volume pack. We have the volume, we have the heat map, and we are looking at trend plus stops. The reason why I want to share this with you is so you have an idea. If institutions are short, stop losses are allocated at 3,120, and the next batch tranche of stop losses is at 3,174. And this is how high the market has to fill this gap to the upside. It's going to create a gap, go all the way to take them out, and then it can retest. The new support will be 2,969. Very important to understand. Last month in May, the market went down 6.71%. That is nothing. And that little percentage, insiders bought more than $150 million worth of stock. When insiders buy, they buy for two reasons. The price, the stock is trading at a discount, and they know that there's something around the corner that is about to happen. They have the knowledge. They have the inside information. They know the stock better than any analyst, senior analyst working for Morgan Stanley or even Goldman Sachs, including Barclays, Lloyds, or HSBC. It doesn't matter. They have the upper hand all the time. Keep that in mind. Okay? So having this figure with this information, I'm going to let you go. But before I do that, if you're finally ready to listen, because you don't have to believe, you have to listen. If you're ready to believe, well, that's a different story. But we want you to listen. Go to the description of this video. Right there is a link so you can watch directly from a veteran from JP Morgan, Ross Gibbons, senior editor of the Insider Report, telling you exactly why he follows insiders, and why you have to do that, because this boat is about to depart from port, and there are a lot of opportunities that you're missing out. Don't do that. Don't let yourself down. Make sure you sign up for this. Go ahead. Go to the description of this video. This is your opportunity to learn more about the insiders. What we think is Wall Street, smartest traders and investors. Go ahead. Click on the link now. You have the information on Tesla. Now you know exactly where the stop losses are located, estimated location of those in the S&P 500, and how far it will have to take up, go up all the way to take those stop losses from those that are still shorting equities in the US. Thank you for watching, and as usual, we wish you, on behalf of everyone at Market Search Daily and the team at the Insider Report, we all wish you good health and good trading.